Yes, we still have Paolo Senatore, who is RMB Private Bank at the desk, and joining us is Gerhard Lampen, who is head of Sanlam iTrade. Let's start with you, Gerhard, now that you've just joined us. In the news item there that we talked about the rating downgrade because of government's inability to manage various things. Essentially, government can't run the country. That's what Moody's is saying, or its capacity to run the country is declining and it has less confidence in it.
Yes, I think it does drive down the seriousness of what's happening. You know, this is getting closer to an anarchy situation where you reach a wage agreement of 3 years, and then employees just go on a strike, illegal wildcat strike, and force management to negotiate with them. What Lonman did, I think, the capitulation of Lonman to the demands, I think is very serious, and it's hurting, and I think somebody will have to stop it. But coming back to the ratings agencies, you know, again, what is their relevance really? Because we all know that. It's after the fact, you know. Tell us something we don't know.
Oh. Paolo, would you agree with that view?
Not entirely. I think the reality is it has a reflection on the country. It has a reflection from the offshore players, which is quite significant. The ultimate effect of it is an increase in the cost of borrowing to South Africa. So there's an implication to the country. It doesn't matter if there's maybe a once-off notch down, but if there's a continual downgrading that occurs over time, it is a reflection on the country and its ability, the political situation and the ability of the country to manage itself.
Yeah, what it does highlight, Gerhard, is that the risks are real. Even though we've seen the rand hold up relatively strongly and we've seen the performance that we have out of our bond market, it highlights that we've got real risks facing the country right now.
Yes, I think, you know, there is two real big risks on the currency, I think. And I think that's one of the reasons we see a bit of weakness now. Is the strikes and what that will do to foreign investor confidence, as well as the quite high current account deficit that we have. Now, we can run high current account deficits for years, you know, before it hits. But then suddenly, like in 1996, it suddenly just hit the rand, and foreigners get a bit worried. And they start pulling out. And then I told my investors and clients, watch the bond market, because the trigger will happen there, as it did in 1996 and as it did in 1998. The bond market is a very sophisticated market. So the trigger will probably happen there. And if you see a lot of selling coming through there, the next one will be the rand, and then equities will be sold off as well. So the same sort of message as 2 weeks ago, that I'm still worried. The market is very high. The news is out about QE and all those things, and good news from Spain and Italy and so on. Italian bond yields came down 60 bips yesterday. So very good news there. Not going to really affect the economy so much. So the markets have risen quite a bit, and I'm just a bit worried that we might be in for a correction, especially when the earnings season starts in the US in about 2 or 3 weeks' time.
What's you guys' view on the caving in, some might say, at the extreme to the wage demands? You used the word anarchy a moment ago. Now, Impala Platinum has said they've reached a wage adjustment. We're not quite clear what that means and how important it is. Goldfields and Amplats have said we're drawing a line in the sand. Now, the investors seem to quite like that, because you look at what the share prices did yesterday on that news. Are we on the edge of something getting much worse here, or is that attitude going to calm things down, Paolo?
Well, I'm not quite sure if it'll calm things down or get much worse. I think the problem is the whole wage negotiation story has become, and this is maybe a little unique to the South African situation at the moment, it's become a little political as well. So you've got obviously political events occurring in South Africa, important ones towards the end of the year, and there's a political element to this side as well. And what's interesting is you find the unions actually sitting on the side a little bit in these instances, which has made the dynamics very different. So I think potentially it's the right thing to hold your ground as a company now. Obviously, one looks for a fair increase. But those that are unrealistic, obviously the mines, and you look at the platinum mines, they're not in a position, of course, given their profitability levels, to be caving in. So it becomes quite significant, I think, that companies do try and hold their ground.
Yeah, Gerhard, you've got politicking happening on the one end. On the other hand, it's also telling of the psyche of the South African consumer at the lower end of the LSM group, and just what they need to be able to afford a decent living. I mean, debt levels in particular have been standing out, for the most part. Today we've had credit extension numbers come through, growth at 7.93% year on year, where the consensus was for 7.95%. So pretty much in line with consensus, but highlighting yet again the debt situation and the debt burden on the average South African consumer. Just
to add to that, there's a very good article by Annabel Bishop of Investec in today's Business Day saying behind those wage demands, as you say, is desperation in some cases. It's not about being reasonable or waiting for the next round. We need the money now because we garnish orders and we're so much in debt.
Yeah, but I think what is really behind this is politics. It is a new union wanting to establish it. It has to do with the whole thing of Zuma's second term right behind it. But you can see it is not unions organized strikes these. It is another union that wants to gain members. Now, to just go onto the floor and say, hi guys, please join our new union, we'll do better. It's not going to work. People not going to move. But you organize a strike like that, you get actually against the union. The unions are asking their members mostly to come back to work, as was the case at Marikana. But now, if what you've done that, I think at Marikana, the new union will have more members than the NUM very soon. So that is, I think, what's actually behind it. Sure, there are some social issues as well, housing and things like that. But if we can, I am very happy with what Goldfields are doing because drawing a line, you have to do this with a reasonable amount of order. There is a wage agreement negotiation time, and you can't just throw all agreements away as they did and say, no, we're not happy with that. We signed the agreement, but now we're not happy, now we're going to strike again. And you must draw the line. I think it should have been drawn by Lonman. I mean, it was a illegal strike. They could have closed the mine for a while. Okay, unfortunately, Lonman is in one of the worst positions financially, so they can't really afford it. But really, this has to stop at some stage. Otherwise, it's going to spread over to all industries. If you get the notion that the more violent your strike is, the better wage agreement you get.
And that's exactly what we were talking about.
If you reward bad behavior.
Yeah.
Exactly, that's
a
bottom
down
line.
the slippery slope. Yeah.
Absolutely. So your approach, Paolo, right now to the mining sector specifically here in South Africa. I mean, we've seen today the performance of the resources sector. We've got some investors still coming in and looking at the opportunity.
So we have really stayed away from adding to these miners in terms of the platinum or the gold sector. What we have been doing is adding to those that are more diversified and more globally spread. For example, a Billiton.
The valuations are also quite attractive on Billiton and Anglos, and you get the spread of it's much safer bet than going into the direct mines. I agree, and I think a good bet is also the ETFs, where the more they strike, the higher the platinum price will go. And the mines, the shares won't benefit because obviously they're not producing.
But the platinum price will.
The platinum price in rand terms will be very good.
Just a final word on those credit extension numbers, and we're going to talk some companies after we go to the break. Credit extension lower than expected, which is possibly indicating pressure for a rate cut?
I don't think we're there yet. It does show that a very lackluster economy, and I think all indicators have shown that the economy is still quite lackluster. It's not going up. I also think on the credit extension and money supply figures, there was a structural change brought about by the National Credit Act a few years ago. Because I don't think we'll ever see, well, ever is a strong word, but I don't think we'll ever see the 28% money supply growth figures and credit extension figures that we used to see. The National Credit Act has brought in a lot of good discipline. But on the economic side, you know, to cut interest rates again, I think we'll need a lot more bad news. The news out of Europe and the US is getting a little bit better. So I think it's just on hold.
Yeah.
This